Welcome to the Explainer. Today, we're digging into automatic data processing, ADP. We'll be using some fantastic insights from a Compass Scope research report, plus we'll look at ADP's latest quarterly numbers to get the full picture.
Okay, so here's how we're going to break this down. We'll start with the basics, what ADP actually is, then we'll dive into what makes them so tough to compete with and where their future growth is going to come from. After that, we'll talk about the risks, check out their latest report card, and wrap it all up with a dashboard of what you should be watching. Let's get into it.
All right, so first things first. At its core, what does ADP actually do? What is this business all about? Well, ADP is an absolute giant in what's called human capital management, or HCM. And HCM is basically the entire complex world of managing people at a company. I'm talking payroll, benefits, hiring, compliance, all that critical behind-the-scenes stuff that just has to work.
Now, the business is split into two main buckets, employer services and PEO services. And as you can see, it's not a perfect 50-50 split, but both are huge parts of the business. Employer services is that core payroll and HR software that most of us think of when we hear ADP. But their PEO service, that's a much more hands-on model.
And this PEO model is really interesting. Just imagine you run a small business. With ADP's PEO, you basically team up with them, and they share the employer responsibilities. And what that does is, it gives your small shop access to things like big company health plans, and the kind of compliance muscle that only a global expert can provide. It's a total game changer for smaller companies.
And if you want to get a sense of their scale, just think about this for a second. That Compass Scope report points out that ADP processes the pay for roughly 1 out of every 6 employees in the United States. That is a mind-boggling footprint in the U.S. economy.
Okay, so when you're that big, you've got a massive target on your back, right? So how did they defend that position? Let's take a look at their competitive moat.
It all starts right here with this number, 92%. That's their gross revenue retention rate. And what that means in plain English is their clients almost never leave. It makes ADP feel less like just another software service and more like a utility. Once it's plugged in, it's incredibly hard to rip out. That loyalty is really the bedrock of their whole business.
So why is it so sticky? Well, because the cost of switching is just ridiculously high. Think about it. Payroll, taxes, benefits, this is mission-critical stuff. If you get it wrong, you're looking at huge penalties, angry employees, and just total chaos. And what business owner wants to take that risk? So once you're in the ADP ecosystem, you tend to stay put.
And this chart does a fantastic job of laying out the battlefield. You can see that competitors definitely have their strengths, right? Paychex is a great brand with small businesses, Workday is the king of big enterprise changes, and Intuit has that great QuickBooks bundle. But ADP's advantage, it's just their sheer unmatched scale, their deep expertise, and their reach across literally every size of business all over the world.
All right, so we've covered their defense, and it's super strong. But what about their offense? Where's the future growth going to come from?
Well, a huge piece of that puzzle is technology. On their last earnings call, the CEO, Maria Black, really highlighted their new platform, ADP Lyric. And it sounds like it's a real hit. Get this, over 70% of its new business is coming from brand new customers, not just current clients upgrading. That's a big deal.
So if you boil it all down, their growth game plan really has 4 key parts. First, just keep growing the core payroll and PEO businesses. Second, push harder into international markets and go after those huge enterprise clients. Third, keep innovating with things like AI and new platforms. And fourth, make money off the interest on client funds. That's money they hold for a short time before paying employees. It's often called float income, and it can be a nice little bonus.
Okay, but it's not all sunshine and rainbows, right? No investment is a sure thing, and every growth story has its hurdles. So, what's the catch with ADP?
The single biggest question really boils down to one word: complexity. ADP is in over 140 countries, they're juggling multiple different tech platforms, and they're sensitive to what the economy is doing. Managing all of that at once is a huge challenge. In that Compass Scope report, it points out a few key headwinds to watch. Competition is getting tougher, especially from these newer cloud-based companies. Growth in that really hot PEO business is starting to cool off a bit. And of course, their business is sensitive to things like interest rate changes and just the overall health of the job market.
All right, enough about theory and risk. Let's look at the actual results. How did they do in their most recent quarter? Let's check out the report card.
In their latest quarter, ADP put up some really solid numbers.
Revenue was up 6%, and their adjusted earnings per share grew an impressive 11%. That shows pretty steady execution, you know?
But this might be the most important takeaway of all, and it's not even a financial number. The CEO, Maria Black, said that this quarter had the highest client satisfaction scores in the company's entire history. And that directly feeds back into that powerful competitive moat we talked about. Because happy customers, they don't leave.
So, with all that in mind, what should you actually be watching from here on out? Well, we've taken all the research and distilled it down into a simple dashboard for you.
Okay, so based on everything, there are really 3 things to keep on your radar. First, the job market. Things like employment levels and wage growth are literally the fuel for ADP's engine. Second, the competition. Keep an eye on whether they're still winning new clients and keeping the old ones. And third, their tech execution. Are people actually using these new platforms like Lyric? Because that's absolutely key for their future.
And all of this leaves us with one final big question to think about. We're in an era where AI is completely changing the way we work. So for ADP, will its massive scale and decades of data be its greatest asset, an advantage nobody can touch? Or will its size and complexity become a giant anchor, making it too slow to innovate against smaller, faster rivals? That right there is the core question for the future of ADP.